Welcome to Loop TV. I'm your host, Gene Munster. I'm joined by Loop's own Will Thompson and Doug Clinton. Our catalyst for our topic tonight is Zillow's earnings. Our topic tonight is Zillow's long term. And if I was going to leave one little nugget for you to remember is Zillow 2.0. We're going to talk a lot about Zillow 2.0. Before we get into the long term, I want to just frame in the near term. The December quarter results were impressive. They beat on revenue, earnings, and they raised revenue for the March quarter, the guidance by 22%. A lot of that was from the homes, the Zillow offers, the iBuying business. They have a much more positive outlook on it in the March quarter versus the December quarter they just reported. And so we're going to leave it there. The December quarter is in the books. What's more important is the long term. And Doug, you do a great job of staying fixed on the horizon. And as you think about Zillow and where this company is going, what are your takeaways on that long term versus what we saw tonight?
I would say that, Gene, you and we've looked at a lot of earnings over the years together. We've worked together for 10 plus years, 100 earnings a year, probably 1,000 earnings calls that we've listened to. And I would put this particular earnings release probably in the top 10 or 15% of earnings that we've seen together. So it's a very strong quarter. But the bottom line for us is, as long-term focused investors, when we were analysts, we were always also long-term focused as well. The first question we ask ourselves is our thesis still intact when we look at the earnings? And I think that the message for this quarter, to me, is very loud and clear. Our thesis is very much intact that iBuying is still very nascent, but it is a massive market. Rich Barton, actually, I didn't know this was possible, but he made me more excited about being invested in iBuying as a theme and invested in Zillow and Opendoor.
Okay, that's appreciated. When we think about the theme, the iBuying theme, just to frame in, is that it's still nascent. Zillow is in the US only, and it is less than 1% of homes are bought and sold online. Will, from the perspective of what does this mean? We talk about iBuying, it sounds good. We like to buy things on Amazon. Makes sense that eventually homes go online, a lot of complexities to actually deliver on that. But can you add some maybe guardrails to what this actually means for the company?
Yeah, so when we say nascent, in 2020, it accounted for all the iBuying companies together accounted for 0.4% of home sales. We think in 10 years, that number could reach something like 10%. That we think unlocks about a $220 billion revenue opportunity.
Okay.
And both of these companies, Zillow and Opendoor, are targeting something like low single digits. We say 4% long-term EBITDA margins, which is about $9 billion in EBITDA.
Okay, 9 billion EBITDA, and what was the run rate? I think it was about 160 million in the December quarter. So you analyze that. That's I'm just going to keep the math really rough here. Call it 500 million for the year, and nine. I think that's I'm going to do you good here, Mrs. Stone, and my fourth grade math. That's an 18x multiplier from where we are today. So big opportunity to power EBITDA growth. Doug, anything more to add on the long term, the opportunity around iBuying? There's some other topics I want to explore, but before we leave the long term view here.
I would just reiterate, I think Will laid out the case for the next 10 years really well, but I think this is a multi-decade opportunity. I think back, and we've made this comparison before, but to Amazon. E-commerce has been around now for 25 years. Amazon's been around for 25 plus years. And still, we're only talking about, if you normalize for the pandemic, probably high teens e-commerce penetration in the US. In some markets internationally, you look at China, it's maybe closer to 30%. And so it takes a long time for these transitions to happen. They happen slowly. Rich Barton talked about this on the call. So I would just say, if you're thinking about Zillow as an investor like we are, you have to be patient because it will take time, but it's a slow burn that's going to last for a very long time.
Got it. And I'm going to frame it our 5-year opinion. And we think of this as a 5-year investment at the minimum. Our 5-year opinion is this can 3x over that period. I'm going to get back to that word of the Loop TV episode, which was Zillow 2.0. And Will, can you just give us some bullets about what actually, they talk about getting in the transaction, but what does that entail? What are the pieces that Zillow ultimately wants to get their hand into?
Yeah, so Rich Barton reiterated this on the call toward the end too. He said, Zillow 1.0, media focused, Zillow 2.0, transaction focused. He talked about another one of my
So
favorite quotes was
that's basically going from an ads business to a transaction business.
correct. Yep. And we talk about them the same way as a real estate transaction platform. Another one of my favorite quotes is he said, "We want one click trade in nirvana with the home buying experience," which involves today, there's all these single point solutions where you're going to a bank to get a mortgage, to someone to set up an escrow account. You have a real estate agent, you're having someone show your house. Zillow wants to set up an entire suite of services that encompasses this whole thing to eventually get to this trade-in experience where they're handling all of this themselves, and it's very complex on the back end, invisible to the consumer, and very much set up the same way that a lot of the services that are gaining traction with younger consumers are today. And like you pointed out on the call, the prime home buyers over the next decade are going to be millennials and the younger generation.
Makes sense. And when you think about that, the cost of selling your home, the one that I think maybe a lot of people think about is the commission on that. Great salespeople out there, they definitely deserve and earn their commission, but that 6%, let's call it. But that's not the only piece. When you talk about those other pieces of the transaction, what does it ultimately add up to?
By our rough math, we think the number is something like 15. Now, there are pieces within that you are spending on your home that you hope to get a return on. So it's not an exact math, but the overall idea is that there's a larger than appreciated amount of value that's changing hands to a variety of parties that is keyed off of the home transaction. That 15% comes from things like renovating your house, paying someone to show it, obviously the 3% buyer and seller agent commissions, paying for the closing costs, which can be 2 to 4% of the home's value, paid to up to a dozen different parties. This is renting an interim apartment if you can't choose your closing date, HOA fees and taxes on your home for the lag in between moving.
Forgot about that. Yeah, a lot, definitely a lot there. I want to think about the long term and Zillow 2.0. They made an acquisition, and this is a platform. I think it's called Home Show. Is that right?
Home showing.
And essentially they are
time.
The market share leader in agents, buyer agents booking with seller agents. And this needs a little bit of framing in here. And so this platform is used by most real estate companies to do that. And I see this is an opportunity for them to take some of the friction out, talk about the pieces. The company talked about that all the pieces are in place to execute on their strategy as 2.0, but that's an example of a piece. Is if you just think about something as subtle as that, just booking the showing. This is for an in-person showing. If they can make that easier for homes, that would make a ton of sense. Maybe a consumer could book their own showing if it was a home owned by Zillow, for example. You don't have to broker it through someone else. So for me, that was a big takeaway on the long term, a smart $500 million acquisition. And go to Doug and then to you, Will. One-liner, or what was your big takeaway? And then I'm going to actually have the final word if you guys don't cover my other big takeaway. Long-term takeaway from what we heard tonight.
I think I've made a commitment previously that I was always going to say Zillow is a fintech company, and I'll say that is my takeaway. I still believe they're a fintech company. We're going to talk more about it over time, but nothing on this call changed my mind about that opinion.
Was anything new and incremental we talk about reinforcing the strategy? Did you pick up anything new today?
Things that I think were kind of built into how we've thought about this thesis. I mean, the fact that they're pushing Zillow closings a little bit more. I just think there's this whole suite of digital products around the transaction. The brokerage, the mortgage, obviously, title service. There's so many things and components that help in kind of facilitating the move of the asset from one person to another, Zillow as the intermediary. I just think that they didn't add anything that I wasn't expecting, but I think they've taken steps forward to make that fintech thesis even stronger.
Great. Will, anything incremental?
My one word takeaway is flywheel, and we've explained this before, but one thing we learned tonight is that Zillow is going to lean extremely heavily on leveraging the big audience that they've built. They released new numbers that they get 200 million monthly active, consumers on the Zillow app. They're going to leverage that 200 million strong audience into lowering their customer acquisition cost to make better offers on homes, drive volume through the platform. As we've said before, it's all about driving volume and incremental monetization of the customers. So lower CAC drives the flywheel.
I guess if you're playing Zillow bingo here at home, I'm going to put my big takeaway was the Zestimate. It sounds like they're going to be honoring the Zestimate on their offers. Now, again, most of their offers are going to be in that kind of $300,000 to $350,000 range. If you've got a home that's above that, it's unlikely you can be able to do this, but that's a big deal. Now, they'll probably take a 5% fee from that. Fun fact is, Will's gone back and looked at this, is over the last, I think, couple years, is homes sold within 2%. Can you confirm that, Will, of the Zestimate? They get it right. And so I think that them honoring the Zestimate is really important, because I think when people think about selling online, there's something when they think about that Zestimate that says, I'm leaving money on the table. I can get a better offer if I do it a traditional way. And they really zero in on that Zestimate. And if they can start to honor that Zestimate and then take the 5% off after it, which would be comparable to how things are done mostly today, I think that is a powerful piece to gaining their trust to transact more online. Thanks for the full team coverage, Will, Doug. On behalf of the three of us and Loup TV, bye for now.